This is the wrap up for the live market open for Friday. Happy Friday, March 18th. So far, the dollar crash extended after the Fed yesterday, with big falls of the US dollar across the board, including the Japanese yen, and WTI crude oil with the good atmosphere topped $40. Currently, this morning, we are seeing some kind of a correction with the US dollar. Corrections are necessary. I cannot say at this moment that this is a change of trend. It doesn't look so. Events we had yesterday, the Swiss National Bank did not do anything, pledged to continue intervening and left rates unchanged. The Bank of England was slightly dovish. They did warn about the referendum. That for me is sort of going even more dovish, but with the crash of the US dollar, this was didn't take center stage. US figures were basically balanced. Jobless claims were okay. The Philly Fed was better than expected. Jobs were okay, but with the downwards revision. And the current account missed, all in all, quite balanced. Today, we do have a top-tier figure, not like yesterday. Anyway, let's talk about the events today. We had German PPI missing expectations earlier. For those trading the Canadian dollar, it's a big day. We have both CPI and retail sales. In the past, retail sales overshadowed CPI, overshadowed inflation. Let's see if it happens once again. We had terrible retail sales figures last time. Maybe this time we could have a recovery. I mean, that's what's expected, but also inflation is important. We have quite a few Fed speakers. We have Rosengren at 3, Bullard at 6, and not here on the slide, but we have Dudley also at 1 GMT. At 2 GMT, we have the consumer sentiment, the early release for the month of March. It's expected to rise just a bit and to imply better retail sales, but you never know with these figures, and later on these are revised. Even though this figure is not the most reliable one, it certainly has a market impact. So let's see if the Fed speakers remain dovish like in the statement. Rosengren and Dudley are known doves, but Bullard is a known hawk. And let's see if the consumer sentiment, what it tells us, we could have a wild close to a wild week. Now let's look at the charts and show you what I was talking about beforehand. Euro dollar now sliding from the highs, reaching the lows of the day, but still on high ground. Yesterday it almost touched 113.50, high resistance 113.75, support 112.50, further support 112.15 and 110.70, high resistance 114.60 if the dollar resumes its crash. Pound dollar 144.40. This works as support but could break. 145 is resistance, followed by 146. On the downside, we have 143.65 and 142.80. Dollar yen still has support at 111. Suspected intervention by the Bank of Japan yesterday after. Remember, 111 is a double bottom. We did have a break under it, but it was very short-lived. Currently 111.32 resistance at 112.20. Dollar CAD looks that it lost some steam. I mean, the Canadian dollar, it couldn't rise too much on oil breaking 40. Still battling the 130 line. Low support, very strong support at 128.30. Was a clear separator of ranges, and resistance at 131.70. We have key Canadian figures today. Aussie dollar off the highs, but still above 76, 76.20. The high was 76.80. Australian dollar had a not so convincing employment report, but yesterday, but it still looks good. Things look good in the land down under. Kiwi dollar enjoyed a positive GDP figure, but earlier in the week, milk prices were disappointed. Anyway, now we're breaking below the 68.20 line that capped the pair early in March. Support at 67, high resistance at 69. Okay, these are the main currency pairs. This is the wrap up for today.